Hello investors. It's been a flat month for the markets. The month started off with a bang actually, but towards the latter part of the month, we had a couple of influential FI brokers saying that India has run up too much, so it needs to take a pause. And we did see some aggressive FIs selling towards the end of the month. So I think markets have remained muted. That's also seen in the kind of play you see in stocks that had run up aggressively in the last few months have cooled off a bit from the highs. However, the good part is that there's no major trend change. We have been talking, especially in the last two reports or monthly reviews, that we feel the markets should need to consolidate, and I feel that we are getting into that phase. Nothing to really worry. The trend is still up. Yes, consolidation is a part of the game, and that's what's playing out at the moment. So that really has been the mood for the last month for the markets. The good part is that global markets are still positive and robust, and the numbers that are coming out are showing very good sales growths. Whether it is overall stocks in the market or your portfolio stocks, what we are seeing is that there is a very good demand expansion. The bounce back post-COVID has been very strong. Whether you call it revenge buying, you can or give it any other term. But the thing is that sales have really picked up, and that is very heartening. However, the problem that happens is that there is a margin compression. Margin compression is nothing that when your cost of manufacturing and supply goes up, the profitability or the percentage of profitability comes down. And if you look at that, that is actually happening across because of the big move in commodities. You know that commodities are a very big input for manufacturing products. And when commodity prices go up, the cost of manufacturing goes up. And that is something which we have been reading in the papers, whether it's metals. And as far as India is concerned and our stocks are concerned, the big devil is actually crude. Crude, as you can see from the chart, at the bottom had touched 19. This is Brent and these are spot, and has moved up to 86. So what you see is a very big up move in crude. Crude and its derivatives are very big inputs to products like paint, specialty chemicals, areas that where we are. So this really increases the cost of production. Most companies with a lag pass it on to consumers. The only difference is that it doesn't happen instantly. It takes a quarter or two. And that is why you will find this compression for a period of time. But later on, most companies, especially where the top line is robust, are able to pass it on. So that really is something which is not so much of a worry, because these companies have seen such prices before and they know how to navigate it. And as I keep repeating, that the top line is pretty robust. The issue that is gripping globally companies, our markets, our portfolio stocks, are the supply chain problems. What are supply chain problems? Essentially, due to globalization, you know that very few products are manufactured within one geography. They tend to find sources from across the world. China, as you know, is a very, very big supplier. However, due to COVID, there was a breakdown of supply chain because obviously manufacturing had stopped, movement of goods had stopped, and to restart this takes a bit of effort and time. And this is where we are finding bottlenecks. The big problem is, of course, shipping, where we have seen that the price. Let us look at something called the Baltic Dry Index. This is really a representation, a broad representation of movement of freight rates. You can see from the COVID bottom of 392, it's gone up to 5,600 plus. So this really shows you the extent of hike in the freight rates. And obviously freight affects the cost of production, and that is why margins also get compressed due to this. You find that ports definitely are clogged. You hear some legendary stories of the number of days of waiting ships have out of the major ports in the US and China. Linked to that is the railroads and there is a shortage of truckers. So many people post-COVID have really not got back to their jobs. They were laid off when COVID happened, but that size of the workforce has not reported back to work. Maybe because the vaccination drive has not reached everyone, or there are fears, or probably people are still enjoying the checks that were handed out, the freebies they were handed out to them by the government. And we feel that this is what is really causing the supply chain problem. As the line goes, that a chain is as strong as its weakest link. And we think that the weakest link in this whole supply chain is the manpower has not yet come back to report to work with the same gusto and same quantity as was seen earlier. So this we think is really a big area. However, we feel that within a few months, things should start getting back to normal, because one must remember that this is a man-made crisis and it is humans who are going to solve it. And as people get back to work, and especially when the holiday season ends, which will be this quarter of some challenges, I think that your supply chains should start smoothing out and things would fall in place. And this is why we feel that this could be another cause for markets to, I think, stabilize, or I would say, move sideways or consolidate for a few months. So on that note, we leave you for this month. And of course, it's the festive season, so I'd like to wish you and your family a happy Diwali and a prosperous New Year. Thank you.